All right, happy October 30th, 2024, and welcome to our Association Essentials series today. We will give it a second for everyone to get into our webinar today. I can see people coming into the room now, so generally takes a second. Unfortunately, Zoom doesn't let everyone in at the same time, but we're glad that you are here, the early birds, and we'll have a great presentation today. My name is Michael Johnson, and I am your host for this month's Association Essentials series, and glad to be here and talking to you today about insurance. A couple reminders on our upcoming schedule. Our last AES of the year will be on December the 4th, which is a Wednesday, HOA Communication Best Practices, and our 2025 schedule will be coming out by the end of the year this year, but the first we take January off, and our first session will be towards the end of February. Might be legislative in nature or something like that, but we'll have the full schedule to you, and I'm excited to have a whole host of new hosts helping us with AES in 2025. HOA Living is our parent company, and members of the HOA Living Network, we're grateful to have you from all around these United States of America. And hopefully you're enjoying beautiful fall weather. I think winter arrived here in the great state of Utah. Yesterday it was a little bit chilly, had to find the coat and those kind of things, but hopefully you're still enjoying some nice days, and everyone has a safe and happy Halloween tomorrow. You can connect with HOA Living companies via social media, Community Scoop, through our web portal, HOALiving.com. Or there's a QR code also for our YouTube channel, where all of these sessions are recorded and placed for your permanent enjoyment. You can go to our website, also go to boards, click on the view classes or recordings, and you can see everything that we've done as well. We use this opportunity in our monthly broadcast to celebrate some of our own and some of you, our board members that we work with or that are affiliated with an HOA Living member in any way. And we are super excited and pleased to announce our Community Manager of the Month. And he works for FCS Community Management. Congratulations to Faraz Kukaswadia. I think I always mess it up. Sorry, Faraz. And he was nominated by his peers for being proactive, attentive, supportive, responsive, and a joy to work with. Faraz has been with the FCS companies, and where I generally am broadcasting these from, except next month we'll be broadcasting from our Minnesota office. It's a pleasure to see him on a regular basis. Thank you for all that you do. Our board member of the month comes from Southern Utah and our CAM, Community Association Management Company. Congratulations to Gary Graham of Huntington Association, always making himself available for the needs of the community. He's proactive and calm when the needs of the community do come up, always looks for solutions to problems. He's kind and thoughtful with all his words. We're so appreciative of each of you board members who spend the time to improve yourselves, not only through watching our webcasts, but also the great work that you do in your community. If you want to nominate someone for Board Member of the Month or Community Manager of the Month, we do get Community Manager of the Month nominations from boards, not just from coworkers, and community managers and or fellow board members, homeowners can nominate also for Board Member of the Month. And so congratulations to Faraz and Gary and your hard work, and gift cards are on their way. All right, let's jump into tonight's This afternoon's program, unless you're on the left coast, and then it's still morning time, headed into lunch. But insurance, always our most requested topic. I tell people one of the most confusing topics that we address with our clients on a regular basis. It's just not that it's complicated, but there's just so much when it comes to insurance. I mean, just look at any of your personal insurance policies and the dozens, if not 100+ pages of inclusions, exclusions, riders, and information that goes with them. A complicated topic in just the volume of information and things to know. So we've tried to simplify it in this 30-45 minute program to give you a basis, but there's so much great information out there at CAI Online, and we've recorded several where we've other AES sessions where we've broken down all the many things we'll talk about today into smaller chunks, and QR codes or links for those will pop up during our session today. You can go find those through how I showed you earlier to get more information. We literally have hours of different parts of insurance information available to you. We really should call this course Risk Management 101, but it wouldn't get the number of eyeballs to watch it, right? So we're using what they call that, clickbait. It's clickbait to call it Insurance 101. It gets more people to listen and attend than risk management, but insurance is just one part of risk management. The whole thing that we're doing that involves insurance is risk management. And risk management, from CAI's definition, right? The process of making and carrying out decisions that will minimize the adverse effects of accidental losses upon the community association. So insurance is a way to fund the economic damages from accidental losses. It's not everything that needs to be done. So we break this down, and today we're going to talk about 4 different kinds of exposures that community associations have, and therefore there's 4 different kinds of coverages, insurance coverages, that you can purchase that helps with that economic offset. But what are those exposures? So there's the 4: property, liability, income, and personnel. Now, if you don't have any, 97% of our clients do not have any employees on their communities, grounds or office or management or anything. But they do have volunteers. And so we'll talk about what kind of exposures you can have with volunteers and if there's coverage for them. Under personnel, income exposures, it's a very niche part of the risk management discussion, but we'll get into that. Our heavy topics, of course, are property and liability exposures. Let's get into the property exposures. And this is both tangible and intangible property. This is your buildings, your clubhouse. If the association is responsible for your living space, the structure, the roof, the exterior, if you have a pool, if you have fitness equipment, right? These are all properties, and there's ways, right, that we limit the exposures. Code and laws, building ordinances and code require us to put in fire suppression systems, generally for 3 or more stories these days. 3 used to not, so several buildings don't have that. And it's different by even city. but generally, if you're in a higher rise building, you're going to have fire suppression system. And how do you do risk management? Well, right, we're going to test that system once a year to make sure the alarms are working, the strobes are working. We're obviously not going to turn them on to see if they spray out of water, because that would cause a lot more problems. But we're gonna make sure the pressure gauges are right down in the control rooms. We're going to make sure that if we're up in the mountains or in the canyons, that we have proper clearings around our buildings and structures, so that, devastating fires don't or can be minimized their impact of hitting the structure. Our contents, the things in the buildings that we have. So think about your clubhouse, and you have that nice fitness room, and you might have, $50,000 worth of gym equipment. We have some of our gyms have $250,000, $350,000 worth of gym equipment in them. Well, if somehow someone comes in and can steal your treadmill, your elliptical, your bikes, or your free weights, whatever, then that is a property exposure. So do you have it behind lock and key? Is there security cameras in the room? Can you track use by a fob or other digital means? Clearly, you can see that all my gym equipment for my home's been stolen. I haven't worked out in eons. So, but now I know everyone thinks in a gym of liability exposures, getting hurt on it, why we don't allow untrained people to use the equipment. We'll talk about that in a minute, but that's different. This is for theft of the property. Obviously, we don't see a lot of treadmills walking away. We have a couple of small gyms that are not attended and kind of out of the way, and we have seen bigger equipment disappear over time, and literally no one knows where it went. But we do see lots and lots and lots of hand weights, free weights that do disappear from our gyms at our communities. Are we going to file an insurance claim for that? No, right? But there are things we can do to minimize the exposure, the property exposure. Intangible property is our data, our information, our websites, all those kind of things are intangible datas or intangible properties. And right, so do we put them behind firewalls? Do we have security usernames and passwords, two-factor identification, all those authentication? All those things are different ways to do risk management on property exposure. Natural disasters are huge part of this risk management and insurance discussion. I'm privileged to sit on a lot of national boards and focus groups and mind shares and think tanks. And, our good friends in the South in Florida, 2 hurricanes, within 3 weeks of each other, significant damage to property from the seawall rising, or the wind, or trees tumbling and things. Hail damage, Colorado and the Midwest is at an all-time high. The tornado activity in it used to be, pretty much in Tornado Alley, but now it can be anywhere. Our Arkansas operations had a tornado go through this spring. So all over, all kinds of natural disasters and weather things are exposures. And what kind of things can you do other than insurance? Well, insurance companies are stopping coverage of properties in some states, some kinds of coverage altogether, because of how much they've paid in claims, or we'll look at the high costs that have gone up. And I think, like on roofing systems, you'll see for the hail claims that are now becoming prevalent, you'll see manufacturers adjust. It'll take them 10 years, but they'll produce roofs that can withstand the hail and don't have to be replaced every storm, because the homeowner association, the industry can't afford to do that. There are 4 different kinds of insurance coverage that can be purchased to take care of those property exposures, and they are commonly known as commercial package policy. There's mechanical equipment breakdown insurance, ordinance and law insurance, electronic data processing, and flood insurance is a type of property coverage. Because so many insurance providers stopped providing it, the government had to come in and help with a flood insurance program. Your structure, when you're buying insurance and you're buying for the walls, the studs, the roof, that's your general base commercial package policy. But if you have boilers and chillers and mechanical equipment inside of your building, that is not covered under the standard commercial package policy. And so you need to buy a special policy for that equipment. We had a fire at our company in an office, 10, 12 years ago. And that, we wwere shocked to learn the building coverage, but the phones and the copy machine were not covered because we didn't have equipment type of insurance. Ordinance law insurance, if you have a major claim and have to rebuild, you go to get your permits from the city and they're like, oh, that's not allowed anymore. We've had old condo buildings have fires, and when the building was built, it was a 3-story building and did not require fire suppression system sprinklers in the building, but now it does. Well, and say the building's worth $1 million, the insurance will not add, when it rebuilds, something that's not there currently. So you go to build your $1 million building, it needs a $90,000 fire suppression system added, and that's probably way too expensive. But the point is, you have to have ordinance law insurance, which is very cheap. Then they'll come in and the insurance will pay to bring you up to code, the current ordinance. That's insurance law, ordinance law insurance. Electronic data processing is for your electronic data and what's on the computers and on your servers. Cybersecurity is a whole different type of insurance policy that we probably should have a full AES on next year, actually. There, we have done a whole AES on this property coverage, property exposures and property coverage. So go to the HOAliving.com website or our YouTube channel and find that insurance series, property coverage, for a full hour with some leading insurance experts talking about property coverage. The biggest thing, of course, that we're seeing nationwide in our personal policies, in our association policies, carriers getting out of the insurance business. For over a decade, insurance companies lost money. They paid more claims than they're bringing in, which is hard to believe, but it's a fact. And the perfect storm of inflation and COVID and increased natural disasters and this decade of losses has led to pretty significant increases. These are the average nationwide over the last 3 years. And we're seeing about another so far, for 2025 policies, another 15%. There's an article from the National Mortgage Professionals publication that it is, not totally relevant, but has some good information on why, and that perfect storm. There's a QR code there for that. But we're seeing in Florida, 200, 300% price increases to, in Utah actually is the lowest average increases in the country. I think because we're kind of a little bit out of the earthquakes, a little bit out of the tornadoes, a little bit out of the hail. We can have the wildfires, but we don't have population living, a lot of population living in them. So this area now tomorrow we'll have an earthquake and a fire and a tornado and hail. We'll have it all tomorrow. So sorry for that jinx, but it just depends on where you are. But insurance and the cost of insurance has led to hearings up at the US Capitol and people trying to figure out what's going on. If you believe the insurance companies, it's not a lot of profit taking, it's recouping, which is pretty easy for them to show. But when we look at our association budgets, and generally out of every $100, about 12, 13% traditionally has been for insurance coverages. If you're in that type of association that all the units are covered by the association, that's going up to 18, 20, 25% of that 100, which means other bills can't be paid. So the whole assessment budget's going to have to increase because of insurance increases. You can shop it around, and we'll talk about that. But when there's less carriers doing it, American Family as a company has to say, and they're not one of the best policies in the world, but one of the less expensive. A lot of smaller associations use, but now American Family Insurance pulling out of doing community association insurance. We're just seeing that over and over. So let's talk about liability and understanding that a little bit. Liability exposure is for when bad things happen to other people because of something you are responsible for. So this is and it's 4 parts of liability exposures. There's property damage, bodily injury, personal injury, and advertising injury. So PD, BI, PI, and AI, these are the 4 different liability exposures that we have. And if we go through each of them, just added these slides this morning quickly. So thanks to our team, because we do get a lot of questions on what each of these mean. Property damage, the PD is when something you're responsible for damages another person's property. So if and there's the example, right? A pothole in association-owned road, a vehicle is driving through it and causes damage, they could claim, and they could file a claim and say, hey, your road broke my car, and that's a liability exposure. You can buy insurance to cover that property loss, someone else's property. So the BI is bodily injury. This is your slip and falls. So association, parking area, or sidewalk, and this has to be, right? There has to be some neglect or intentionality. The more serious the injury, the more that the person injured is going to say it was because of neglect for whatever reason. Obviously, we cannot collect and catch every snowflake as it falls to the ground. And no court or insurance company is going to expect you to do that. But what are our risk management techniques, right? We've hired a company and transferred the risk to a third-party company that's responsible. We put ice melt buckets out and tell our owners, please use caution. We remind them, we communicate. There's all kinds of things, in our mountain ski areas. They put, they run hot water under the concrete so that it just melts away things as it falls. There's a lot of things you can do for risk management, but if heaven forbid something does happen, then you have coverage for BI, bodily injury. Personal injury is if there's libel, slander, false arrest, invasion of privacy. The mistype is all on me, my apologies. Wrongful entry or malicious prosecution. Well, we're not arresting people in our associations. We want to. We want to put some of those doggies in jail for some of the damage they do to the common areas, right? But are we, I've seen personal injury exposures to associations. They put up security cameras and they claim that it's used to see into a bedroom window when it was really for the parking lot, just the bedroom windows behind it. So you got to be careful with some of those things. And another example is the association decides, hey, we got a delinquency problem. We're going to publicly shame those deadbeats in our community. We're going to publish a list of all their names and how much they owe. Well, what if the amount is not completely correct? Or what if they made payment between the time the list was printed and when it was distributed? All that would be libel and slander and those kind of things. Wrongful entry. Associations have the right to access people's private property units if there's like a common water connection in it, or if they have to repair a leak. They can't just barge in. They need to give some notice. But we've seen associations sued for wrongful entry in the past. Advertising injury, pretty rare. If you have our giant master plan communities that have on-site staff, a lot of them do a newsletter or even a magazine on some sort of time frame, or their website even sells ads. If you say the local deli nearby wants to offer 20% off, or 10% off to their customers that live in your community, and you accidentally put 100% off and people are mad, they could go in there and say, hey, you misrepresented us. That would be an advertising injury. Or also just if you're using other people's online magazine or newspaper articles without permission, that's an example of advertising injury. So pretty rare in most of the typical association space, but it can happen. So the coverages that you can get, and once again, we have 2 whole seminars on this topic that you can find in our archived recordings. One, understanding commercial general liability policies, and the others on directors and officers by itself. So commercial general liability insurance policy will cover your, right, what are they? PI, BD, the advertising injury, and the personal injury, PI, PD. Those kind of things are all in general policy, but some things are excluded, just like in property insurance. And so hired and non-owned automobile, what does that mean? Well, you're the HOA president, you're driving your own vehicle, and you're going to Costco to pick up treats for your community Halloween trunk or treat tomorrow night, and you get in a car wreck, and somehow it comes up that you're on association business. Well, now they could sue the association because that's the reason you're running that errand, and your general liability policy would not cover you. You would have to have a hired and non-owned automobile policy to cover you. An umbrella policy takes all your liability coverages, and for a small fee, you can double, triple the amount of coverage. And then D&O, directors and officers liability insurance. You're sick of us talking about this kind of insurance, right? And you are We run it. We're always telling you that you need to get it, and you need to have the right kind. You need to have a standalone D&O policy versus an embedded D&O policy that comes standard because of better coverages. You're on the board. You're going to get sued. We see it all the time. And the D&O policy is going to cover the cost of your defense. They're going to hire legal counsel to represent you as long as you're acting in the best interest of the community. Some of the key things to note is that D&O policies are on when the claim is made versus, so if we have a fire in a community in March of this year and the policy on March 28th, and they got a new insurance carrier policy starting on April 1st, and the claim's filed in May, well, we're filing it not on the new policy that's in place, but on the insurance that was active when the claim happened. D&O is opposite. So same thing, say there's a meeting on March 28th and an annual meeting, and this is a real lawsuit. Homeowners sued the president of the association. They were in a heated argument, and just in that heated argument, the president, a little bit of spit came out and hit the person on the face. That's assault, and they sued the president in many months later, like in July. Well, it's the current policy in place is going to cover that, not the policy that was in place at the date of the incident. And you can learn more about that at our Directors and Officers AES program. That's online, but we want everyone to have it. Oh, another thing too is the difference between embedded and standalone. A lot of times associations and directors are sued because they want something done. A homeowner's upset and wants something done. They want the association to make the people who put up a shed that doesn't match the documents. They want to make they're telling the association said, it's just really not a big a deal. We're not going to follow up. So the homeowner sues association, says, start enforcing this. That's a non-monetary claim. Embedded, the cheaper D&O policies will not provide legal coverage, legal assistance on a non-monetary claim. So the association would be on their own. And that could cost a lot of money. Still, legal fees are outrageous. So that's a big difference, something to look out for. Your income exposures are reduction in income or increases of operating expenses. This isn't, we have a bunch of owners not paying their assessments. There's no insurance for that. But say you have a bigger clubhouse, and we have some big clubhouses that rent out for $1,000, $2,000 a night for wedding receptions and parties and those kind of things. Well, if you have a fire and now you have to cancel 2 months worth of reservations, and you were going to bring in, $50,000, $60,000 in rentals, there is an insurance that will help offset that cost. Also, say your community manager's office is in the clubhouse and it gets damaged by a fire, and you're going to bring in one of those portable offices and put it in the parking lot of the clubhouse for the staff to work out of while the clubhouse is being repaired. That's an increased expense as a result of the fire, and an income exposure insurance would pay for some of those type of claims. The income coverage, our business income insurance, there is an assessment fees receivable insurance. It's very specialized. I've never seen anyone buy it and or use it, but it does exist. It's more for like a hurricane wipes out a whole building. Well, let me go to even a worse example. the Surfside condo collapse in Florida a couple of years ago. Now we have a whole building destroyed, gone, 100 lives lost. No one's going to be paying their monthly assessment on those units that no longer exist. But via the documents and law, they're responsible for paying those assessments. And so that's the time, that's the kind of insurance that's available for assessments. Personnel, right, are claims from employees, such as workers' compensation and workers' injury and employer's liability. We had in one of our offices, I think it was last week, there's a restaurant loosely attached to the building, and they had a gas leak. It made some of our employees not feel well. We sent them to the ER to be checked out. That's a workers' compensation type of a claim, and there's insurance for that. And that's required for employees everywhere, unless you're a sole proprietor working on your own. And employer's liability is for discrimination claims. So employee claims sexual harassment, disability harassment, or non-accommodation, those kind of things, that there's insurance to help you as an association. So if you have association employees, and right, this is why most associations say, hey, management, you be the employer, so we don't have to worry about it. That is that kind of coverage. Does it cover volunteers? Yes, there are times, and we've seen claims where it's claimed that, at a community barbecue, that a member of the pool party, is a pool barbecue thing, sexually harassed an owner, and they filed a claim against the association because that owner, the alleged harasser, was doing it in their capacity as a volunteer on behalf of the association. Volunteers all the time in communities are like, we're going to save money and we're going to climb up poles and replace light bulbs and do those kind of things. Well, when that volunteer gets hurt, falls off a ladder or step stool or trips or whatever, that would fall under a workers' compensation type of claim. And so those aren't the other types of insurances. So talk to an insurance professional, and they can help you find the right kind of personnel coverage, even though you don't have any employees. So some of the things we can do, this is our risk management. This is what we can do to manage risk. You got to review and understand the governing documents, your community. What are your requirements? What does your policy? Read through all that fine print, see what it includes and doesn't include. You might be shocked. Develop preventative maintenance plans. Like once a year, do you ask the management company to please go do an inspection of the concrete and find trip and fall hazards? That's not standard in the management agreement, but it's something that we do for our clients for an hourly rate. Develop an insurance chart, communicate to the homeowners, right? You want to communicate to homeowners. They think every time my neighbor has a little water leak from their tub or their washing machine or the ice maker on their fridge and it comes through to my unit, they're like, I'm just going to file a claim and the association's going to have to pay for this. Well, every one of those little claims, it hurts everyone through increased insurance rates and increased assessments over a period of time. So watch that. Water leak policies, publish those, talk about them, keep them out there. As management, our job is to advise you that you have a responsibility to select and purchase insurance. We can't choose your insurance for you. We can have, we have 24/7 customer service. We have live customer service about 14 hours of every day, except for Sundays, but we have 24/7 someone get a hold of, so we can start the process. Your owners don't have to go wake you up in the middle of the night. They can wake up our staff, and we can go and get started on minimizing the property damage and making sure we have health and safety going on. Sometimes, and our contract says, right, we have permission if there's property being damaged or a health and safety issue to take care of it to a point, even for your permission, because that's our job. Evaluating agents and brokers. There's great agents in these fields all across the country. Insurance is a very state-by-state licensing type of issue, but look at their experience. Are they a specialist? Your buddy that's been selling you auto policies and for you and your kids for 30 years probably isn't who you should be buying a community association insurance through. Do they have specific knowledge about community associations? How quickly and easy is it to do claims? We don't want an insurance agency when we have a claim to say, well, here's the toll-free number, call. We want to call them and have them help us. Do they participate in professional insurance trade groups and the Community Association Institute? What's their standing, licenses, and bonding? And the CIRMs, Certified Insurance and Risk Management Specialist. And you can go to the CI website, and I'll just pop this on here really quick. Their beautiful new website, and you can go to resources and directory of credentialed professionals. And let's just say, we'll just do Utah. And we can go to Utah, and we can go by the credential, right? And so we can see the CIRMs, the Certified Insurance Risk Management Specialist. Hit search, and these are the ones that are in Utah. These are all folks that really, these are the only folks we use. It's always the association's choice, but we want them. There are some that sell insurance to associations, but they're not a CIRMS designated individual. Some states, right, we need to talk some of the insurance agents to do it. We're in Arkansas now, and we have no CIRMS in Arkansas, right? And so you got to look at that. Minnesota has a couple, and with the same firm. And so this is a designation. Talk to your insurance agent and say, hey, I want you to have this CIRMS designation. It's important to us to work with a credentialed insurance professional. And, you know, if you're in a state like California, there's pages of these CIRMs, but in some of the other states, not as many, but it's an important thing. And so tell your insurance agent. We've told in Utah more than one of the people on that list that they needed to get their designation for us to do business with them, and they did it. So don't forget, right? We always navigate into the discussion of insurance, but we're talking risk management. What are we doing to minimize? We don't want any insurance claims. If we can prevent it, we don't want insurance claims. So what are we doing to prevent them? That is risk management. So we should do an annual insurance review. And for our communities, you could do a little committee, but look at what are the current laws, federal, state, local, case laws. What do our governing documents say? What kind of requirements are coming from FHA, Fannie Mae, Freddie Mac, those guys, the secondary mortgage market? Because, yeah, our documents don't, most documents say you need to follow whatever the secondary mortgage market is suggesting. But you would never want to necessarily say, well, Fannie Mae has this requirement, we're just not going to do it. We don't care. Well, then you're going to cause the resale value of the homes and units in your community to decrease. So you want to check that out. Contractual obligations. Have you transferred? We had a community, the way it was designed, the landscaper to mow the lawn, there's like a 6-foot patio between all this landscaping on every unit and these big, beautiful patio doors. And it doesn't matter which way the lawnmower went this way or went this way, however they tried. About once a month, a rock would flip up from that lawnmower and break one of those glass windows. And the landscaper, the community loved the landscaper, and landscaper loved doing the community, but they said, we can't pay for this. It's a design flaw in the community. And so we are taking out, we're not going to cover that. We're going to break windows, but the association's going to have to reimburse the homeowner or figure out another way. So one, the association could use property insurance, but too many claims leads to higher rates are being dropped. So they actually worked with the landscaper on a risk management technique, and they pulled, instead of having active landscaping that needed mowed or weed whacked, they did another 4-foot barrier off the patio so that those patio doors wouldn't be broken. And good judgment, business judgment. Remember our hierarchy of authority. So if there's laws and statutes, every state has different rules, especially in attached products, condominiums, townhomes that are attached to the neighbors, on how that's all going to work. And that's going to trump anything that's inside of your governing documents. You're looking for who's insured, what time period is involved, what's insured, what's covered, causes of loss, and what's excluded, what's limited. You're going to, and if you want a copy of all these slides, these are all emailed to everyone who registers, right? So you automatically get a copy of these slides when the link is up, and then they're also available on our website so that you can have this list in front of you. So let's look at some examples. Here's in our documents, our governing documents, CC&Rs for our communities, we're going to have a lot of language that we need to follow. And the good insurance agent's going to want a copy of your governing documents for them to review. You should review, and they need to review to look at the different obligations the association has. Typical language, right? You'll see a whole article or section of your CC&Rs that is called insurance. And some things I want to show you are keywords, right? The shall versus may game of our documents. This particular association's policy shall have insurance, shall have property insurance. It shall be an all-in or all-inclusive policy, and shall include not only the walls, but fixtures, improvements, or betterments. Once again, the word shall, and this policy for this community shall afford protection against loss or damage by fire, windstorm, hail, riot, aircraft, vehicles, vandalism, smoke, and that. That's pretty typical language. But you know, what do you do now that hail is not being covered in some states? You're going to have to really document well that you were unable to get hail coverage, or you can probably find from the higher up insurance lines, the big Lloyd's of London and things, you know, coverage after $100,000 or something. You're gonna do 100% replacement cost, because sometimes you can get a cheaper policy by not having 100% replacement cost. Guaranteed replacement cost. This will have, they shall keep an amount of $10,000 in a savings account. State statute in some states requires it to be available. It doesn't always have to be in a separate account, but it's really easy to track that way. But accounts are expensive, and so We just recommend the association have that in their operating account. But some states require it in a separate account. So it talks about using that the association's policy is primary over you, the individual homeowner. Use business judgment, shall provide notice. Association shall have no obligation to ensure the personal and real property of the owners inside their homes. So you're in a condo building, the whole building burns down, heaven forbid. All your personal things that you had inside your unit, the association does not cover. Temporary housing while the building's being rebuilt for 6 months, association does not cover. So you can buy your own coverages that cover that, but this is making it clear to the association, the homeowners, that's what's going on here. Then you also will have to buy that liability insurance policy, and it'll be of no less than $1 million. You shall buy directors and officers insurance. Now look at some of these things. Theft and embezzlement insurance, association may obtain. Now we highly recommend, right? You make that a shall, but this document, whatever says you may obtain. Remember, your management company, we have theft and embezzlement policies, but that's for our own employees. That's not for boards and volunteers. And so you want to look at that. Workers' compensation shall buy it. The named insured shall be the association. Here's another set of documents. Sometimes it's a little harder to see the insurance section, but pointing out that this is saying you got to have good insurance, best rating. It's best is a rating service, but it's got to be good. Can't be crappy insurance. There's crappy insurance out there. The authority to adjust the losses shall be with the board. Shall, may not, shall, right? Know what you have to and don't have to do. And there's your, at the bottom there, shall be consistent with the provisions of the act. So this is saying, whatever these documents say, doesn't matter if the state law has been changed, you got to keep current with that. Insurance will be part of the base assessment. Deductibles shall be paid, in this case, by the owner who would be liable for the loss. So I have a building and I caused the damage, something in my unit, and I'm responsible for it. You're going to pay the deductible. This says then the deductible shall not exceed $5,000. They're in the yellow box unless 30 days notice. So since policies are getting so expensive, associations are upping. Now, some states cap it and say we can never have a deductible above $10,000, but most states let that be any amount. And we're seeing $50,000. I've heard of $100,000 deductibles now. And that's to get the cost down, right? If most claims are below those, except for the big massive one, and those don't happen, thank heavens, very often, well, they do a big deductible. Now, remember, and there's a whole, we have AES on this, you can go buy, if your association has a $50,000 deductible and you have a $70,000 claim, you're going to pay the first $50,000. You can go buy your own insurance that pays the association's deductible for you. You can talk to your local personal insurance agent then. Earthquake and flood insurance is always brought up. And do you have to have it? Most associations say shall have the right, but not the obligation to maintain. And but if this one says if 2/3 of the owners vote to have it, then the board has to do it regardless. And of course, assessments would go up with those kind of things. All right, there is a lot of detail in insurance, and we might have some questions. So I'll ask my team to tell me if any questions were dropped in the chat. And then if not, if we have a few minutes, we might take some open mic questions. And now remember, I'm not an insurance professional. I did stay at a Holiday Inn Express once, so I am pretty smart. But team, we got any questions in the chat?
Yeah, it looks like we've got one from Rich. He says, how important is property insurance if we have no common property in our HOA?
Yeah, that's a great question. So hopefully, Rich, your CC&Rs don't require you to have property insurance. We have lots, I would say 20% of our 600 plus associations that have no personal or no property to insure. So there's no owners units, there's no clubhouse, there's no marquees, fences, playground equipment, and therefore the only thing we cover is the liability insurance, because still there's those risks that someone else property or themselves could be injured because of an action of the association. I've seen crazy things out there. The association in a small, I think it was 12 homes community, no property. The association owned no property, but they thought, hey, we've got a vole problem. Voles are like little critters that like to eat the roots of grass and kill grass in our community. And the association, if we get all 12 homes to come in together and hire a pest control company, then we can save some money. And so the association said, yeah, that would be a good thing. And they hired a company that used poison to kill the voles on everyone's personal yards, and a pet, someone's personal pet, not in the community, because everyone in the community knew this was happening, but someone in a neighboring community walked their dog through the community. They ate some of the poison, and I think they didn't die. The pet didn't die, but was severely sick. There were $10,000 in medical vet bills, and they sued the association. So that's a liability claim, and that's the kind of insurance you would have if you don't have any personal property. Great question.
Okay, a couple others in there. Why might our insurance costs have gone up much more than the average? What factors are there possibly affecting that?
Well, it could be claims. Remember, insurance looks at the number of claims filed or maybe coming, not the total dollar amount. So this is one thing I don't understand. But if I have in my community a major problem and a fire, and it's one claim, the only claim in the last 5 years, but it was for $2 million. But the insurance looks at that as less important than a community that has had 3 $5,000 water leak claims in the last 3 years. So it's frequency of filing claims. So you could have had too many claims filed. Could be the type of coverage you're asking. So you want to do a claims, and right, we are required as your agent and you as a board, if you get a letter from and this isn't a property coverage, this is a liability claim, right? But we get a letter from a homeowner says, I'm suing the association over this. We're required to send that to the insurance company, even though we know that homeowner is just full of hot air and is just venting. Well, the insurance companies can stock that and say, okay, we believe there's some risk coming down the line, and they're going to hold that against you too. Ask to meet with your insurance agent and have them go over and just tell you if it's just industry, or you have this one particular thing, or it's number of claims. Your insurance agent will be glad to do that and will have a better answer for you.
Okay. Jake asks, is roof and or gutter damage on a townhome covered by the HOA or by the owner?
Right, and that's a community by community question. So some states, so we'll just do Utah since that's where most of our viewers come from, about 80% of you. In Utah, after 2011, associations are required to cover the exteriors of attached products, townhomes and condos. Before that, not always clear. We have most townhomes built these days are the owner is responsible for the maintenance of the exterior, so the gutters, the roof, the siding, but the association, because of that law, has to do the insurance. So typically it should be covered, but once again, in Utah, the law says that, say your gutter's damaged just from tree limb, and it's your tree, and the law says you're going to pay for the deductible. So it's kind of like looking at the risk benefit, what the deductible cost is, who benefits from it, so if it's only the gutter on your unit, then, and the deductible is $5,000 and maybe it's $8,000 for the damage, your unit's going to pay the $5,000. The law also says if it's multiple units, so say there's 5 units and the gutter came down across the whole building for some reason, and all 5 have equal need, then they would each pay $1,000 each of that $5,000 deductible. So it depends on your documents, and that's why we talked about on the one slide, having put together an insurance chart, because that is the kind of thing, now I'm looking for that slide, that can help your homeowners understand who's responsible for what on insurance claim issues. So great question. And we're glad to look at your documents specifically.
Okay, it looks like that's all that's in there. I don't see anybody else's hands that are raised.
Okay, we are over time because I'm long-winded and I try to tell too many bad jokes. So thank you for your patience. If you still have questions, please reach out to myself and our team, and we are glad to review those with you. As always, our shameless request, if you're happy with today's program and the free education we provide, go give a 5-star review to us or one of our partner HOA Living Network companies. Those are invaluable to us, and we appreciate each and every one of those. So thank you for attending. Next month on Wednesday, December the 4th, I'll be live and broadcasting from the beautiful state of Minnesota. That my staff has promised me a day in the mid-60s. So if that doesn't happen, their fault. But we will be broadcasting at our typical 2 p.m. Eastern time on that day, our last one of the year. Hey, thank you everyone for, if you're a customer or if you're just listening in, we appreciate you taking the time today to improve yourself. Have a very great Thanksgiving. We're thankful for you, and please let us know if we can do anything else, and we'll see you the first part of December. Thanks for tuning in today.